installment, and today was an interesting day. So, for those who have been following, Jerome Powell spoke today, and today was a market flip. So he came out and said basically that he thinks that they've beat inflation, that they need to take it easy on rate hikes. There'll be another 50 basis points coming in December, but that's pretty much it, which is not what I was hoping to hear. But expected given the economic data that we saw. So new jobs are down. The US is going into recession. Q4 is going to be a negative quarter. So we're going to see some negative stuff coming out here. And I think that that will be a big piece of why they will hold. They think that they've tightened too hard, too fast, too much. Jerome flip-flops, and a lot of central banks right now are flip-flopping, and it doesn't instill confidence in their plan. They went too easy. Inflation ran out of control. We've had inflation wild for a year and a half now, almost double-digit inflation. And now we actually need deflation to fix the amount of inflation that's run wild and rampant. So here we are. Now today, the NASDAQ, including after hours, has rallied over 5% in a single day. As you guys know, I'm short the market. Today was a big underperformance day for me. I'm like down 3%. I'm not entirely in short. I do have some longs, so I think I'm net down like 2.9% or something today. But the market's up 5%. The NASDAQ moved 5%. The Dow is now up from September 20%. We've had either a really good bear market rally or the market is pricing in that everything is going to be better now. I don't know if I agree. I think that next Q1 and Q2 of 2023 earnings season is not going to be good. We're going to start having, for the first time, bad earnings. We had really good earnings this year, despite the fact that inflation was out of control and rates were high. Companies were still profitable because the inflation was like Cyber Monday. We had great sales. Black Friday, we had great sales data, up 7, 8, 9%. But that's just what inflation has been. They're actually not up at all if you adjust for inflation. And so with inflation getting a kick in the pants, the economy is going to take a big dip in the shitter. So I think there's a real possibility that they start stimulating. They raise rates in December. They pause, which means they stop all of this contraction. They pause and then maybe even start stimulating, start putting money into the economy, which is actually good for certain industries and certain sectors. But for the long term, will basically force us to fight inflation for longer and keep rates above where they need to be, or I guess above where they should be, for longer. And so that's the downside, is it's like instead of pulling off the Band-Aid, they're going to keep pulling off a little bit at a time, stick it back on, or a little bit at a time, stick it back on, a little bit at a time. I'd rather just rip the Band-Aid off, fix the problem. It's painful, we go into a recession, the world moves on. That would be a better solution. Unfortunately, I think they're going to try to get between this rock and a hard place, and we're in for some rocky months in the times ahead. So, by the way, hi everyone. I don't know if I don't see anyone in the comments yet. Put something down in the comments there. I can see people are in the stream. Sometimes YouTube glitches out like this, where I don't get anyone into the comments, but I can see that you're there. So, by the way, throw anything down there if you want me to answer any questions today. Today is the last day for Movember, so I'm excited to get rid of this dirty little mustache that I have. I'm excited to be free of it. I don't know how people, some people have a mustache all the time, and I have to like coif it to the side and I don't have thick facial hair by any means, but it's annoying. Like you're eating some food or having like a nice drink of a smoothie and like you get a little bit on your mustache here. It's just gross. But trying to make a statement, trying to support the boys. I have some friends who are, bigger into this than I am, and I support men's health and men's awareness, and men are suffering more, I think, now than ever before. And so to all the men out there and to all those who are suffering with things like prostate cancer and all that, here we are, suffering through this dirty thing. I'm gonna shave it off tonight after midnight, so excited for that. Yes, back to what's been going on. So in the real estate world, how does this translate? Because a lot of you guys watching this are thinking, how does the stock stuff translate in the inflation and the interest rate stuff? Well, for one, the stock market moves faster and more forward-looking than real estate does. So real estate lags relative to the stock market. So when we see the stock market, typically, like right now we're seeing a huge rally. But in general, we've seen a bit of it's gone into the toilet a little bit this year, right? It's been down 30%. Most companies down 30% or so. Especially tech. And so what we see is that, if you look at a lot of the data, following a recession, as the recession begins, companies start to suffer and their shareholders force them to cut costs, and then they lay people off. And the effects of that are 6 months to a year lagged. And so as we go into Q1, now we're finishing into Q4 of 2022, Q1 of 2023, we're starting to see major job layoffs. And the new jobs that are coming are not as good. Everyone's in pain. House prices are finally starting to fall. The effects of this, the wealth effect, that we wiped out trillions in the stock market, in real estate, in the crypto market as well, trillions of dollars of wealth has been lost. The result of that, it will be further pain for the real estate segment, which is less sensitive immediately and less liquid initially. So it takes time for the pain felt in real estate to be trickling down to a closing date, which then leads to a comparable, which then leads to lower comparables. We're starting to see the chart look like this, riding up, and now it's riding back down. We're like here. We'll correct, I think, and at some point hit a bottom. I'm hoping that it's not, dragged out for years. I'm hoping we don't have like what we had in the, late 80s, early 90s, where inflation was still pretty high. Rates were still 5-6%. And we were in a sort of situation where, if you guys recall, if you bought a property in Toronto, Canada, as an example, in 1991, by 2001, a decade later, if you held that property for 10 years, it was worth the same as it was when you bought it. Lost to inflation. So we've had real estate underperform before in a higher interest rate environment with a little bit higher inflation. That sort of thing can happen. One thing that is different this time, than then, is that our current Liberal government, though I don't like a lot of their policies around energy and just most of their fiscal policies, one policy that is really bullish is the immigration policy. And they're trying to get Canada's population growth up to 1 million people a year, primarily through immigration. And we're a 39 million population country. So that's 3% compounded growth in population. And our housing supply can't even grow by 1% a year. So we have a 2% shortfall, or it's about 600,000 to 700,000 people that don't have a place to live if we don't start building here. So there's a real problem that exists on the supply-demand side, which I think will keep prices strong here, despite other things that maybe aren't as great about Canada. So I'm really bullish still about real estate long-term in Canada. I don't think we'll have the same flat market that we had in the 90s into early 2000s. Even in London up until 2010, for 20 years, properties were pretty much flat. They barely kept up with inflation for 2 decades. I don't think we'll see that same pain. I think that as rates do come down, which realistically rates are still going up. So into December, they'll continue to go up. You're probably, by the time the bank phases it in, you might be looking at January by the time you see a peak in rates. They'll hold and they'll pause. And there's a chance that this pausing causes companies not to lay off as many people, saying, hey, things aren't going to get worse. And it's possible that, we've already seen this, but a lot of the unions, a lot of the employee unions are negotiating for 8 and 10% raises. And so if everyone expects that inflation's gone up 10% and everyone wants a wage increase of 10%, if that happens and everyone gets the wage increases that they want, and the data starts suggesting that people are earning more, especially in the white collar sectors, and we see on top of that the government says, hey, we're in a recession next year, which they're going to acknowledge. They're still they're trying to acknowledge it. In the new report, they're like, it is very likely, it's more likely than not potentially that we'll be into a recession, because they were denying recession this whole year. Like everything's in the shitter, and they're like, we're not in a recession. Now they're like, we might be in a recession. It might be coming. Let's ease up. When they ease up, they stimulate, right? Not only will they ease up, but people will be suffering. And when they're suffering, then they will have to stimulate. As soon as they send stimulus checks out to help people, as soon as they start bailing out businesses that are failing, that's when they print money. When they print money, money supply goes up, inflation comes back. You can't give people money and expect them not to spend it and drive the price of things up. The only way that they can do it from a demand side attack on inflation. I'm not talking about supply side because they don't want to deal with the supply side stuff. Their pandemic stuff is still real in their mind and all this. Anyway, they don't want to tackle supply side. They would much rather deal with demand side. And when they're talking about demand side, the only really levers they have are what they've been doing for the last 2-3 quarters, and it's been working, is stop printing, raise rates, right? Crush the bond market. And it's been crushed pretty hard. We could sit, as a Canadian, trying to get a mortgage in, say, Florida. You're looking at 9 or 10% interest right now. A lot of the mortgage products in the US are near double digit. We're near 10%. And with this new December hike, at 10%, nothing cash flows. Every single multi-family property is a 3 cap rate, 4 cap rate, 5 cap rate, 6 cap rate, in any large metropolitan desirable area to own property. Any quality cities with multiple millions of people, you buy a property in a good area, you're looking at a 4 to 6 cap rate. If you lever up at 10% cost of debt against a 4% asset, you lose almost 2.5 to 1 on every dollar that you borrow. That doesn't make sense. Real estate needs leverage to function. That's just the nature of how real estate works. People can pay these valuations because of leverage, because they can borrow from the bank. No one buys everything in cash. Even if you could, you would never deploy why would you want to own one property in cash when you could own 5, 20% down? It's the same amount of money. You can control 5 assets at 20% down each for the exact same amount of money as buying 1 in cash. And 5 should always outperform 1. So of course, leverage makes deals better with real estate because it's a stable asset. We love to lever it up. And the leverage drove cap rates really far down to 4, 5, 6. And cap rates need to come back up if rates stay this high. It's possible. It's possible, depending on which month you talk to the Fed and which economists you talk to. Because remember, a month ago, guys, everyone said inflation isn't finished. It could go on for a while now. We need to be tight. We need to be, raising rates. And then all of a sudden they flip-flop. And the Fed comes out today and says, hey, you know what? We're going into a recession. We said that we weren't, but we might be. And so we need to wait and see. We think we've done a lot of damage here. 50 basis points, no more. We're going to hold off, basically, is what they're saying, right? That, I think, might be the wrong move. It might draw this out longer than it needs to be. This may end up going on for some time, right? We've had real inflation in the rental market, as an example, because remember, a third of what people spend is in housing, right? Over a third, actually. The average person spends almost 40% of their income on housing. And rent prices are ripping up 25% year over year. That's real inflation. If you adjust how people are actually spending their money, it's on their car payment, which is again double now because interest rates are triple. Instead of a 3% mortgage or interest on your car, you're going to pay almost 8 or 9% right now coming into December. So their car payment's triple. Their rent is, up 20, 25%. If they have to try to find a new place to live, it's good luck, right? In places like Florida, you can just increase the rent 20% year over year. There's no rent cap. So in certain markets, you can pass that right on to your tenant. And so that's pain for the average person. And, especially in some of the grocery segments, like meat is up 20% in the last 16 months. Certain segments, a lot of where people spend money, they're getting crushed. Yeah, TVs are down and certain people are citing that kind of stuff. And I think that's too heavily weighted in the CPI index. CPI index. I like the way Kevin called that out. So I'm going to give a shout out to me, Kevin. But definitely. I'll go to the Q&A here for a second. Hey, how's it going, David? Hello from Alberta. Hello from Ontario. Fern says, good evening. Good evening. Eden says, good evening. Says the mustache for 50 years. I'm sorry for you. I feel sorry for you having to have that. Stickman Finance says, you actually think inflation will stay until 2024? So Stickman, I think until 2024, we will have rates that are this high. So by I mean this high, nowhere near where they were at the start of this year. I think that we could see 6-7% mortgages like we are seeing right now into that foreseeable future. And that's painful for people who chose variable. And we're like, hey, this is going to be back by next year. Because remember, if you talk to me 4 months ago, talk to any of the economists in the spring, we were all like, oh, it's not going to get this crazy. The US won't get double-digit mortgages. No one can sustain that level of debt. We have the highest national debt. By the way, debt is still rising. Consumer debt is on the rise even still. And because people are all indebted and interest rates are rising, it's double crushing people, right? So anyway, let's just say a best case scenario. Let's say inflation has peaked. It might not have. We don't know. it could go down and then peak in Q1, Q2. They could stimulate, and then we have a bunch of inflation again, right? Like the market goes. If we have a bull market and everyone makes a bunch of money in the stonks, and crypto comes back a little bit, and they give some stimulus to people, and maybe rates might be coming back down. Businesses get more bullish again. They don't lay people off. We could have another rush of inflation, and it may peak again, in which case the Fed has to go even harder. And this time when they go hard, because rates are already high, they start getting a double-digit rates. And things can get crazy quick when they need to get serious and they need to talk dirty to us. I hope it doesn't happen. It's possible. So to say it's impossible, it's definitely possible. It's happened before. Could happen again. I didn't think we get double-digit mortgage rates. I didn't think that was a thing again. Then just consumer debt, national debt, business debt, government debt, national debt, like the federal debt is higher than it. They honestly can't afford to carry the debt to other nations at these rates. So taxes have to go up dramatically. What happens when you tax an already inflated budget of the average American, the average Canadian? We break. You can only take so much, right? When you're taking from what we pay at the grocery store 10, 20% up, when you're taking for all these sectors, it's just pain all around, right? I don't know. So on one hand, I'm like, this isn't sustainable. Rates have to come back down. Of course, I know this. On the other hand, this could last from January of this year till into 2024. We start seeing rates come back down. We'll see. They've got to be very careful of bringing rates down. So I'm hopeful. I want rates to come back down. Remember, I'm in the real estate business, and there's no other business more greatly affected by higher interest rates than real estate. It's probably the most sensitive industry to rates. So I've operated through one of the worst years that I've ever operated in the real estate market. I'm still making money. So of course I'm happy to see rates come back down, because prices will come back up with real estate. And what I do will make more money. I need to be careful during these times, just like you guys do. We've got to be careful about running our deals and underwriting our deals very carefully. We're running our numbers, making sure that they're still profitable, even if things go down, even if we have to sit on a property for an extra 3 months because it doesn't sell right away, right? It's one of those things, I think, that we're in for a bit of pain next year. What happened? Someone said what happened to the market. I saw it pop up here a second ago. Today was a rally day. Geez, like 5% on the Nasdaq's like, whoo, it's a Santa rally. I honestly think if you're short right now, maybe get to cash and wait. The right time, given what we heard today and the bullish, the flip-flop of the Fed and the bullish sentiment, I think the bulls are going to go for a little run. It'll be a bear market rally. I don't think that the recession is over by any means, but I think we could get a good rally before then testing the QQQ NASDAQ to new lows below 250. I think that's coming into next year. So for now, I think that there's nothing wrong with getting into cash. If you want to participate a little bit in this rally, you could, I guess. Long term, you'll be fine if you buy the indexes. I mean, it'll all come back, right? Like, I don't know. There could be pain into next year, though. So just be careful. Dollar cost averaging tells us, the data supports that when you buy in a recession and you hold for a long time horizon, you will win. You only lose if you apply leverage and you short over a long period of time. You can short in a short period of time. You can stay in cash too. There's lots of options. But yeah. Oh, I got a super chat. Hey, William, thank you for the super chat. Appreciate it. Says, Mike, culture question. We had a Canadian interview at work today. However, she ordered a drink at lunch and then went to the airport to fly back home. Do people drink during the work week? My boss was shocked. Yeah. I mean, drinking is pretty common in the workplace. Like, especially in like when I worked at KPMG, it was like everyone was having drinks at lunch. In the accounting field, it was very common. We would go with clients and everyone would get beers. Also, when I worked in consulting in the tech world, yeah, people would go for lunchtime beer. Like that's, yeah. I mean, I don't know if it's a Canadian cultural thing. I think a lot of Europeans also will do that. But in the work world that I saw in Toronto, after work drinks too was very, very common. Lunchtime drinks depends what you're doing, right? Like on a Friday, you go out for lunch? Of course. For an interview though, I don't know. It's not unheard of. I don't know. Is it super professional? Probably not. I usually gauge on the people I was with if I was going to be doing that. I don't drink, right? So like I haven't had a drink in years now, but I used to partake to try to be normal in the corporate world. Um, I don't drink a lot though. It's just poison. I don't get a lot of benefit from it. It's just not for me. Next question was Gurinder says, "Hi Mike, thank you for hosting. Is it easy to change zoning for properties? Example, changing to duplex." Well, no, it is not easy to change zoning. It's very difficult. It's a long, lengthy, expensive process. Thankfully, Doug Ford, the Ontario Premier, has come out and told municipalities that every single property has the right, regardless of zoning, to allow for a secondary dwelling unit, which means up to 2 units in London. Anywhere in London, no matter what. At first, London said no, not in the school districts, not near Fanshawe and Western. Then that got overturned. Now it's anywhere in London, you're allowed to make a property into a secondary dwelling unit. That means that duplex zoning is useless. No one cares. If your property is a single family or a duplex, it's the same thing. The zoning means nothing now because Doug Ford's new rule. There's another rule coming out early next year, in the next couple of months, where Doug Ford's going to allow 3 units in any property, and potentially, we're going to see how this legislation comes out here in Ontario, but potentially up to 10 units without any site plan approvals. So that might allow things to push a lot quicker. Normally you have to go through like zoning, site plan, and then eventually get a building permit. And so it would take like, in some cases, a year to get through all of that. If it was a 10-unit property, it could take 2 years, and lots of fees and really expensive development charges and donations you have to make, parkland dedications and all that kind of crap. You had to basically donate land or pay money in lieu. There's a lot of that kind of stuff that slowed things down. And so I love what Doug Ford has done for real estate investors here for trying to solve the housing crisis. He's like, hey, let's fix this on the supply side by incentivizing, or rather not punishing, our developers who are adding units. And so it's the best. Municipalities are going to resist it. They're going to be the NIMBYs, the not in my backyards type folks. We're going to be like, we don't want students living in our neighborhood. We don't want multiple units. We're against this, blah, 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 blah. Those people will try to slow it down, but it's coming from the top. And basically the new understanding is that any property will be allowed to have 3 units. So a triplex is the same as a duplex, is the same as a single family. So you're advertising, I have a legal triplex. Well, pretty soon, any property is going to have the capability to become legal triplex, unless, and this is the only caveat, it doesn't comply with building codes. So that's something that you can't get around. So if it, if it has like a 5'10" basement height, it'll always fail. Has to have the 6'5" minimum, right? So certain properties might not lend themselves, but zoning wise, there'll be no difference. So yeah, just something to know about. If you have a single family property, it's going to become more desirable because you now have the ability to make it into a 2 or 3 unit property. You could duplex the basement and then build a carriage unit in the back, and they can't stop you. That's going to be something that the zoning can't stop anymore. There'll be a lot less hurdles to jump through. You just go and get a building permit, done. They're even easing up the parking restrictions. So if you have a single driveway, they don't care anymore. So that's great that they're allowing all this now. Where they used to be like anal about the parking too. That was one thing that used to hold us up when we tried to do duplex conversions. And now they don't care. They want housing. They'd rather have a unit that someone can live in that might not comply with like all the parking requirements. It's like, too bad. Somebody needs somewhere to live, and not everyone has a car. So, Tony says, it's great, killing the value of my home. Statistically speaking, properties with carriage house units and multifamily add value to neighborhoods. They increase the comparables. It's, statistically speaking, raises the prices of real estate. So there is no mathematical argument trying to say, like, you might not like it, but micro living is coming. People want to live in smaller spaces. The tiny home movement has proven people to live in 200 square feet and be super happy. So it's coming, and it's good for society. There's tons of demand for it. People want to live in these units. They want to bring it for their kids to stay home into their 20s because they can't afford. They want to be able to have extra income to pay for their mortgage, which is higher than it's ever been because real estate prices are crazy. It drives up the price of properties on the street, which is great. If your neighbor puts in an auxiliary dwelling unit, like a secondary tiny house or a carriage house or a lane house, that increases the value of your property 100%. It's an increased comparable. They put in a duplex in the property next door, it increases the value of your property to most buyers. In fact, just statistically speaking, it increases the value of the properties. So, and also legal units, you can then have safety and regulation around. So all around it's good. there isn't really an argument to, ignore it, because it does provide a lot of good, and people's right to housing supersedes the not in my backyard folks. My opinion is we should allow it. We should regulate it maybe a little bit. There's nothing wrong with saying, hey, like, adhere to the rules. You don't want a party house next door. There needs to be bylaws that, the tenants are respectable. But I'm sorry, Tony, that's just part of developing. That's part of a city growing, right? It's what we want to see. We want people, if they want to be able to put their parents in a lower unit, they want to put their kids in a lower unit, they're allowed to have 2 units. They're going to do it anyway, but now they can do it legally, and now we can regulate it, right? There can be bylaws that they can't have trash out if it, they have to clean up the trash. There are certain rules now that will apply to these units because they're legal and they're regulated. So it's good. We want it. 100%. The majority of people want it. The people who don't want it are being selfish. It's not what's best for society. Honestly, it's not even selfish. Like, it'll actually help your property values too. So you'll win. You'll get compensated. It might be a little bit annoying to have an extra unit next door, but is it going to really affect you that much? Like, not really. Hopefully they place good tenants. Just in general, like, a single family house could be rented to a bunch of students and create a frat house. So adding an extra unit doesn't change anything. They could still rent a property out and have tenants there next to you. So I haven't really seen a good argument to not allow it. All right, next question. Evening, William, how you doing? It says, hey Mike, is it worth pursuing legal action against contractors? Any experience with it? Roughly $17,000 claim, but contractors are literally broke. $7,000 legal costs, $3,000. So this is a tricky one. My philosophy on dealing with, by the way, you're not alone. Majority of contractors are, having dealt with probably 500 subcontractors in the last 11 years. I can tell you without a shadow of a doubt, maybe it's because I typically hunt the bottom of subtrades. So I'm not hiring the most expensive guys, I'm hiring the cheaper guys. But majority of them are broke. Ass to mouth, paycheck to paycheck. That's just the nature of the trades. A lot of these guys are into drugs, drinking, partying, having a good time. They're in a risky industry, hard on their body, and a lot of them smoke and have vices. That's just the nature of the blue-collar trades. Not all, but a lot, especially when you're finding guys who are willing to work on rental properties. Remember, contractors that are working on high-end luxury homes get paid the best. So they're doing the best quality work. They get paid very well for it. They mostly work for, either industrial projects that pay really well for those people who, have like, they just want to move fast, good quality, they'll pay well. What's left is the guys who can't find, like the guys you're going to hire to renovate your basement. They're the guys who can't find the quality work. Like, there's the homeowner who will pay $25,000 for a shower install. They don't care about the value. They don't care that they're adding $15,000 in value to their home, but they're spending $25,000 in the shower to get exactly what they want. They're customizing. That contractor gets paid really well. Then there's the pool of contractors who service, the rental property budget crowd. And you're probably one of those people if you're talking about your rental property. That group of contractors, most of them have trouble holding on jobs. That's why they work for themselves. Most of them have vices and problems. It's very common that they don't know how to price a job properly. They'll make a mistake partway through. They'll have life vices where they'll take an advance and then they'll be behind from a previous job where they got burned. Maybe it was their own fault. Maybe it wasn't. Maybe they hired a bad employee trying to build their business. It's a really hard business, by the way. Even you watch Meet Kevin's videos from a couple years ago when he had a construction company and he lost 300 grand. It's a great video. That's why I'll never start a construction company. That's why when I tried it and also failed, it was like, okay, I see why. I see why it costs $8 to change your light bulb. It's just really, it's a hard business to scale and it's really expensive to do it well. And so to do budget renovations, it's really hard to do at scale. Anyway, my point is it worth it? It depends. Sometimes, and there's a very few select times where I would litigate against a certain contractor. I'm a vengeful person. And so if someone intentionally tried to fuck me, I would spend the money to make sure they were punished, make sure their credit was at least had a mark on it, so other people knew that this person had screwed me. So there's a principal side where you could go after that person for the 17 grand, and you might not get anything. It might be more money after nothing. But at least you can say to yourself at the end of the day that you saved the next person from getting conned or screwed from that contractor. There's the other side of this school of thought where it's like, and I've done this too, where I've walked away and been like, you know what, this person's having a really shitty time. They're not a great contractor. Maybe they have bad quality of work. I just had this happen actually with a contractor where I got taken. I cut losses early, so my downside was mitigated. I let them go. move on to their project. They just weren't good at the things that they had to do in this project, and we have to redo most of their work. So unfortunately, I lost a couple thousand in materials, a couple thousand in labor. That's part of it. Part of the journey when you're trying out new guys. It's just part of it. I have a lot of really great people that I work with. I have a few people that I keep on full time, and I don't share those contractors. The ones who are good, if I find someone who's really good at what they do, I'm like, come work with me full time. You can do some side work, whatever, on the weekends, but like, I want you full time. You only work for me primarily majority of the time. You find someone good, you hold on to them, and you find projects for them to keep them busy. They're happy because they don't have to go spend time quoting and invoicing and all this stuff running a business, and they can just focus on doing what they love and doing what they're good at. And they're happy because they get work all year round. And that's a win-win situation. And then you can trust that and no one's perfect, so you got to work with everyone's imperfections, work with their skill sets. But I found in those situations, I don't lose the same as I do when I hire a contractor and they go through a bad situation where they have to fire an employee, and then they take it out on me by not finishing the job properly. Or, again, running off, like you said, with a bunch of money. That happens all the time. They take deposits up front to carry the next job. I hear so many horror stories from people reaching out to me, asking for coaching and help of all these contractors who have screwed people. It's unfortunately the worst part of real estate investing is when you're just getting started on the small time projects, trying to manage all of these sub trades. And the affordable ones are affordable for a reason. There are gems and diamonds in the rough and exceptions to the rule, and those are the ones you got to find. Or you pay top notch for a good company. You pay $60, $70, $80, $90 an hour for a really good general contractor who can get guys at $40 an hour who are really good, and he watches them and manages the bottom line and knows what they're doing and isn't on drugs and doesn't have all these, vices and problems and isn't, job to job, out of money, borrowing from the next job to pay for the next one, or pay for the current one, sorry. But if you choose that route, you're not going to make any profit on your flips and your renovations. You're going to lose money. Like, I'll give you an example. There's been some basement renovations where I brought in really great contractors that I know do. I didn't hire these guys, but I knew of them. I've heard of referrals. They're really quality work. I didn't end up paying these people because their quotes came out like 150 grand to redo this basement. And I figure the value that's added to this property is like 160 grand by doing this conversion. And so I'm going to pay a contractor 150 grand plus all my holding costs to make 160 grand. I'm going to lose money after my holding costs. There's no profit margin. But the work would go without my involvement at all. Super smooth, the best contractors, the highest quality. Things would be perfect. Mwah. If I was a homeowner and I wanted a nice seamless experience, I'd go with that company. Then there's the guy that comes in and quotes you 80 grand. And he'll do a decent job. He'll miss some things. There'll be some deficiencies. You're probably going to have to struggle with them a little bit. They might change their price partway through. You're going to have some challenges. And then there's the contractor that's like 30 grand, right? And they're like, just don't even hire them. They're going to fuck it up and leave you halfway through the job and take the whole 30 grand. And you're going to have to go hire someone else to fix all their mistakes. And you're going to lose money on that person too. What you want is the guy in the middle somewhere in that range that is still profitable. Let's say you make 160 grand on the property. You want to pay like 80 grand. So you have margin to pay for mortgage and your interest payments and your expenses and all the things that are going to come up as well and still make a profit. So some people message me like, Mike, why don't you just hire the best trades for everything? I'm like, look at the people that hire the best trades. They don't make any money. Those flippers don't make money. Fact. Like, if you're flipping with the most expensive trades, you aren't making money. You might look really nice. You have great, Instagram reels, and you have great, videos for Facebook that you can share with everyone, but you're barely making any profit. And it's all about profit. Like, I would much rather do 2 really profitable projects than do 10 projects where I've got to pay really, really well and have slim margins. Because if there's a recession or something happens, you buy at the wrong time, those projects get crushed, right? Because your property is 160, let's say, and you agreed to pay a contractor 140 to do a really quality job on that renovation. And that might be the market price for renovations for the higher end contractors might be there. They might not be charging you that much. It's just, that's the market price. You're just not adding enough value to the property for it to be worth it to take that project on. Some of these big projects, you don't make money. Some of these big additions, people try. That's where real estate investors don't make a huge profit sometimes, especially in a down market, where now that $160,000 upside is now $100,000 upside. You're still spending 140. If you had hired the guy for 70, who's going to bug you every day, you got to help them with, figure things out. They have questions all the time. They don't know what they're doing. You got to bring in other sub trades sometimes to help them out. There's more management and effort on your end, but then you can save the project because you're only paying them 70, And when the project goes from 100, say 140 profit, because it's not quite as nice of a finish as the 160K renovation I was talking about before. So maybe a little bit lower quality renovation, but still really good. So you're like, instead of 160 upside, you got 140 upside, but you're spending 70, and the market falls. So now that property is getting, say, 80,000 upside. You still have a profit margin there. Whereas those other flips, you just don't have that, right? So be careful, guys out there. The job of the real estate flipper is to manage cost just as much as it is to source good quality deals. I think sourcing quality deals is the number one thing, but the number two thing is cost control. And a lot of guys don't have the cost control piece nailed. They don't control their cost of financing. They don't control their cost of renovations. They don't care where people buy the materials from. They just let it run. And that can be expensive. You got to be shopping the deals. You got to be making sure that your trades are focused on cost control. Anyway, there are certain contractors who understand cost control, who will be able to find ways to save money without cutting quality drastically. You know what I mean? There's lots of examples I could share, but ways to do the same job. It'll look roughly the same, quality is the same, but now I've been able to use MDF paneling as an example to do shiplap. I can cut a 4x8 sheet of MDF paneling for free at the store, and it comes in pieces. Or you can go buy the shiplap kit at Home Depot, and it's $450. Fucking $50 versus $450 in materials. That's a 900% difference. But most contractors walk in, they buy the shiplap that's, in the package from Home Depot, and they don't make their own. And so you can use like tunings. This is one example I've seen a contractor use of thousands I've seen across my time. Those little tips and tricks are necessary as a flipper because your goal is to maximize profit. So anyway. Oh, I got into the rabbit hole there. I don't want to get into the weeds. I try to stay out of the weeds, guys. That was me starting to get into the weeds. My bad. I'm gonna bring it back up to 20,000 feet here. Como says, where do you think we are in the business cycle? Oh, if I knew for sure where we were, I'd put all my money on it and I'd be a wealthy, rich man. None of us really know where we are. And tomorrow the Fed could flip-flop again and we go into the biggest recession/depression we've ever seen. Inflation we could get one bad reading, right? It's all it takes. I don't know. I don't know the answer. I'd be speculating the same as anyone else. What I do know is that if you're investing for the long term, continue to buy quality companies as they get on sale, buy a little bit of them, deploy your cash, dollar cost average in, have a portfolio, diversify your asset classes. Don't be all in the stock market. Don't be all in crypto, especially not crypto, especially in a recession. Don't be all in real estate, though I can see an argument for a really good real estate practitioner, someone who really knows their stuff, who is an industry expert, to have a really heavy real estate exposure. I, as an example, have a heavy real estate exposure, and that's because it's an area that I have a competitive advantage. I can earn a return that's extraordinary to the real estate market. The real estate market could go down 20%. My portfolio could be up 20% on the year. I can outperform the market by 40% because I'm an expert operator. I'm not speculating. I don't just buy and hold and hope for the best. When you're buying real estate, you shouldn't be praying that the price goes up, right? Regardless of what the price is doing, you should be making money. There are exemptions. Like if we have a 30% drop like we had in Ontario and you load it up on properties in January, February, you're probably suffering right now. Even if you're the best flipper ever, right? Like timing is also important. Don't get caught up in buying the top of the market. There was a reason that I wasn't buying anything in December, January, February, March, April. I bought nothing because the prices were overvalued. And I was waiting for things to come back down. I didn't know they would come back down this hard. They have, and they continue to drop. We might see some plateauing. I don't know. I think that anything that cash flows really well, you'll be okay, guys. That's the biggest thing is like cash flow is king. Don't buy single family properties that don't cash flow. Don't do it. Don't do new builds right now. A bunch of new builds are going to go bankrupt in the next 6 months to a year. They're eating into their credit right now, and we'll see more developers go under, and there'll be opportunities to buy their inventory at pennies on the dollar. How many more pennies on the dollar? I don't know. Could be 80 cents on the dollar. Like real estate's pretty sticky. It can only go so low, but there will be opportunities. We're starting to see builders go up, go belly under. So there will be opportunity, guys. I think the place to be buying right now when you're trying to buy is quality assets, the cash flow. Those are the two metrics. Quality assets, the cash flow. Ideally undervalued. If you could buy them at like 50% off the peak price, so what we saw like the peak in like February, March. If you could buy assets at 50% of that price and they cash flow and they self-service at these interest rates, hold those for 5 years, you'd be laughing. You'd be a happy person because you'll have these assets that'll eventually will get prices back to where they were this year, the start of this year. It might take 5 years, it might take 4 years, but we'll get back there, especially in Canada, especially the way that our population is growing. They're targeting the next 5 years to get our growth rate up to 1 million people a year. That's what they're trying to get to. So there was an interesting stat I shared on my Instagram that Matt shared with me, and I shared his. And it was that the population growth in Canada is almost the same as the United States. They are 10 times the size as us, and we are growing almost as fast as they are. I haven't fact checked that data, but I reshared it, and I thought that was really astounding. That we're almost growing as fast as they are, but we're 1/10 the size. So there's a lot. I'm bullish on Canada still. Yeah, I mean, I'm bullish. It's cut and dry. Michael says, "Hey Mike, I'm thinking of becoming a property manager as a side hustle for single family properties. Any words of wisdom, tips, tricks, etc. in Metro Vancouver, BC?" Cool. I think that property management, depending on which segment you work in, is a really shitty business to be in, especially in the multifamily space. I couldn't imagine a worse job, like getting all these calls from tenants and the tenants fighting with each other and all the problems. However, single family is super easy to manage. So, and it's kind of fun, like, placing ads and doing some showings and, signing a lease and getting a nice family in there and they barely bug you. That property management's easy. And in Vancouver especially, you'd have a high caliber quality of tenant. So that would be a great side hustle, I would say. But if you're going in London, Ontario, I'm managing properties in East London with 3 or 4, quasi-legal units, maybe 3 illegal units and 1/4 one that's illegal with some existing tenants that you inherited in a shitty end of town. You're dealing with all the worst kind of shit. They're going to get, roaches and bed bugs, and they're going to be in tenant fighting and garbage outside. You got to send someone by to clean up and city notices because the neighbors are calling and complaining. That kind of property is the same as managing 10 single families in Vancouver. So it just depends. It just depends. Quality assets, people. Quality assets. Did you just say ATM? ATM means at the moment. At the moment. I don't know if I said it or not, but that's what it means. Okay, found where I was at again. Okay. What are your go-to places to find non-scammy STR for snowbirding down in Southern Florida? And which areas would you recommend to check out some higher cap multifamily real estate? So Varun, it's a great question. I am heavily investing in Florida. If you want to partner up on something and you want to do a bunch of deals, like say you can commit to me $500,000 or $1 million and we can do some deals together, I will double that money in 5 years in Florida. Doing STR that you could use it when you're down there as well, and we'll cash flow it the rest of the time. That's my bread and butter. That's what I'm going to be focusing on heavily. And multifamily in Florida. Specifically in Florida, Southern Florida, 100%. Northern Florida sucks. Honestly, I would say even Central, like anything north of Miami, for me is a no. Anything north of Orlando is a no for me. Now, there's an interesting pocket in Southern Florida around Disney, around Kissimmee area, where you can get some really great STR, quality cash flow, but there's a lot of competition. Properties are cheap there, though. You can find a cheap house for like $300,000. That said, I like the East Coast. The reason for that is that I like that a lot of the cruises all leave there. I want to go over to the Bahamas real quick. You can. It's beautiful weather. West Palm Beach area is a favorite for me. We're locking up a property today, actually, just north of West Palm Beach for $285,000. It has a pool. It's a big 1,900 square foot bungalow, backs on a little lake, ARV like probably 400. Again, happy about those kinds of deals that fall in my lap, right? And that one's already committed. I already have a partner lined up, but that kind of stuff is great because you can get a couple $100 a night on STR with that. And so it's like $6-7 a month. It's a nice place you can go when you're down there. Those kinds of properties make a lot of sense. And I think that, in the next 5 or 10 years, as Florida continues to be a desirable place to be, if you buy quality block construction, ideally not on the water, a little bit in, but still in on the coast, close enough to drive to the beach, then I think that you're going to be in a great position to get some insane appreciation. I think that people are wanting to live in Florida. It's one of the top 10 most desirable places. So trying to pick around those areas where people want to be. And remember that if you're too north, it's cold. Whereas like in Miami, it's always warm, right? So like Tampa is cold, you know, Jacksonville and like St. Augustine, even like honestly, even Daytona, it's cold. You get days where you gotta wear like a coat and a hat. You don't want to like that's not an ideal snowbird location. You know, you want it to be warm all the time. So I think Southern Florida, if I'm trying to pick like the most desirable STR, but go where there's good cap rates. And so around West Palm Beach, you can find some really good stuff. I feel like when you're buying a quality, like 1,900 square foot, newer built in the 2000s, let's say, you know, bungalow that's concrete block construction, at that price range, you can't really rebuild it for that cost. So you hold something like that, you don't have a lot of downside, a lot of potential upside. You know, the cash flow positive. You go somewhere like Naples, and everything's $1 million, and it doesn't cash flow. It doesn't make sense. You get a couple $100 a night on short-term rental, you don't make any cash flow. Like Naples, although it's a great place, I've been there. It's great. We enjoyed being there for a week. I've been to Florida now like 10 times, but last winter I spent the whole winter there. You guys know, and I went and toured every city. I didn't do the northwestern part, but I did like, you know, Jacksonville across to like Tampa, Clearwater, all the way down, every single city, all the way down all the coast. And I stayed at almost every city all the way down just to get a vibe. And I don't know everything. I did the Central Florida thing too, and got flips going on in Central Florida right now too, towards like Lake City and Crescent, Georgetown. Like again, anyway, Orlando, I've had properties there too. So I've got some experience in a few markets, but that was my find, is that for me, the East was better. I liked the West a lot, but the cap rates didn't make enough sense for me. And the hurricanes come harder off the Gulf. The water's warmer, higher risk for me, and we saw that this year. But there's nothing wrong with Naples. It's just that, like, I don't know. I thought the valuations were a little rich, and the cash flow wasn't commensurate. Like, if I'm going to spend $1 million on a house, for me, I need 20, 30,000 a month top line for it to all make sense, right? And they're just, those properties you can't get $20,000 a month, 12 months a year. You just can't. Nowhere even close. So numbers just didn't make sense for me. But it's a beautiful city and really rich. A lot of money there. I had family who, I had long lost great aunt who lived in Naples. She had a beautiful house there. Hey Jonathan, how you doing? Number one app games. Elias says, hey Mike, thanks for the great content. One question, if there was time, if you're buying in cash, would you do an inspection? There's a property selling at a low value because of unauthorized ADUs. That's just ... I can't see the rest of it, but I don't like to buy in cash. Okay, I do buy in cash, but I always refinance after, because I don't want to hold the property long-term in cash because it guarantees you a bad rate of return. So for a flip, makes total sense. Like, I'll hold the property 6 months in cash, no problem. But if after 6 months we've turned the property around and we decide we're going to hold it, we put a mortgage on it. The ROI doesn't support holding properties in cash. You get a 5-to-1 return. Remember, you can hold 5 properties, 20% down, or 1 property in cash. I'll always take 5 properties, 20% down, right? It's just, the math just is better. You get way more, when the market does appreciate again, and we do have a bull market, you get way more having 5 properties than having 1. So leverage is your best friend. But do you do an inspection? I do my own inspections. But yeah, you should do an inspection. It's important. Inspections will save your ass. So a couple $100 to get safety, totally worth it. I would always do an inspection. So could I turn my single family I'm in right now into a duplex without requesting to change the zoning like tomorrow morning? So Mason, right now you can get a secondary dwelling permit on any property in Ontario, I'm pretty sure. Most municipalities are on board. I don't know if all of them are, but most. Most certainly in London you could. Yeah, definitely. But you have to still get a building permit, make it legal. So you got to make sure they come through, make sure there's smoke alarms and all that kind of stuff. But yeah, you could. So a duplex zoned property. You can have a, by the way, you can have a duplex zoned property that's operating as a single family. And so it'd be the exact same as a single family, zoned single family. You have to go for a building permit either way to convert the duplex zoned property into a legal duplex, or a single family property into a secondary dwelling unit, adding a second unit. The same thing, building permit, same building code, no difference. So there is no value for having a legal duplex in Ontario now. So I know I see realtors still advertising that, like legal duplex. It's like, or I see one zoned duplex, like previous zoning duplex, huge value, rare. I'm like, rare? Every property in all of Ontario can be a duplex. Rare? Your zoning means nothing now. Feels bad though if you fought for it. I was one of the first people back in like 2015 to do a duplex conversion. Anyway, sucks to go through that and then have those changes, but it's part of the game and it's good for society. So I can't cry over spilled milk. Okay. Everyone give Mike a like. Thank you, Michael. Appreciate that. Yeah, for all the people who have watched tonight and people who are watching after, give it a like. I appreciate it. Tells the algorithm that there was value here tonight. It's your way of clapping. You know, if you've enjoyed something when someone speaks, typically when they finish, you give a little clap. That's what hitting the like button is saying, hey, thanks for, by the way, unlike clapping when someone's speaking, you can hit the like button while I'm speaking. That's cool. I ain't gonna hate. Default says, what tips and advice would you offer when looking to purchase from a wholesaler? The challenge with buying from a wholesaler is you need to know your shit cold. The reason for that is that there isn't often time to do proper due diligence. You don't get time to go through the property and do proper home inspection and all of these things that you normally want to do because you got to buy firm to get the best deal from a wholesaler. Especially if it's a really, really good deal, people like me will go in sight unseen and buy it because I will assume the fact that I can just tell, even from pictures, I can usually tell what's going on. Like I can look at a foundation or anything. I have a background in construction. So if you don't have that, get someone like me to go look at the property for you, at least see it. Sometimes the really, really good deals, like the Muskoka cottage that I just bought for 192 grand. Yeah, I'm pretty excited about that. Closed on that yesterday. Or I locked a contract up yesterday, just across from Lake Rosseau. Almost, I think it's like 3/4 of an acre, beautiful, up on a hill in the Canadian Shield. It's got a bunkie house, 1,100 square foot bungalow with like 14-foot vaulted ceilings. Super cool property, potential 3-bedroom, 192 grand. ARV is like 500. Do I have a chance to go see that? No, you got to lock that shit up quick, right? Like if you see a property that makes sense, you do what you can to try to get a little inspection, try to get some videos or pictures. But in most cases, you got to move quick. At that price, I was paying for the land. So the building came free. Everything else is just bonuses. And when those work out and you make a big profit and you're able to jump quick on it, there's not a better feeling. Like there's nothing better than the rush that I get when I lock a property up that has a double 6-figure upside. So I'm always jolly when I have those days. And that was yesterday. 2 properties actually. Joseph says, knowing what you know now, how would you start over again at 18? Would you still focus primarily on the Rosehart snowball strategy or implement other ideas and investments? Joseph, the thing was when I was, you don't know what you don't know, right? When I was buying my first property at 19, it was about getting my living costs down. So my sole focus, I was rent hacking before that, paying $300 a month in rent. And then I found an apartment with a lease. We bought it together and we were sharing, I think it was like $599 for the rent. So we were paying $299 each to share a 1-bedroom apartment. That made a lot of sense. Before that, I was renting a room for $299 it was a great deal. Like market price is like $450 for a room. So I was getting like 50% off. And it was all inclusive too, which was great. I didn't pay for internet, nothing. Even had free food. The guy, like the old tenants left behind a bunch of free food I got. The guy was always downstairs, was a bit of a drug dealer, but he was always sharing, his food and stuff. It was great little setup. He tried to give me steroids, tried to sell me steroids. I didn't take any, but I have fun stories, about rent hacking. But then I elevated from rent hacking to house hacking, which is the exact same thing as rent hacking, but you basically get a bunch of roommates and you own the house instead. And you get your costs super low and we live for free. So that was the reason I got into housing, was like, oh, I can buy a property and I can live for free. Sweet. And like maybe make some equity by renovating it. Double sweet. So that was why I got into property. And then I bought my first rental property at, I might have been 21 or 22 by the time I got my second property. It was like a full 3 years between my first and my second property, saving up the down payment for the second one. Again, that was a huge mistake. I should have gotten to things earlier and started wholesaling, right? Assigning properties. I should have been partnering up with guys, going and find active partners and working with them to earn slices of the equity. Why did I do the Rosehart snowball? The reason for that was that I didn't believe, or historically speaking, in London from 2010 when I started to really go hard in 2015, 2016, but from 2010 to 2015, there was no appreciation in London. Like houses were the same price every year. And you didn't expect, even if you got like a 2% inflation, you were happy. So when I was buying these properties, I was buying it for cash flow. Or if I could add value to the property through renovation, again, that was what I was looking for. I didn't expect the market was going to appreciate a ton. And so I wasn't thinking that flipping was possible. The tax consequences of flipping were very bad in your personal name. I didn't have a business doing it. I was working full time. So for me, it was like, how do I get out of this job? I need to get cash flow. So I bought a bunch of properties thinking the cash flow from the portfolio will more than replace my job, then I can quit my job. That's what I did. And I did that at 24 and I was done. That's it. 21 and 24, I worked full time and I bought a bunch of properties, quit my job. Could I do it again better? Yeah, for sure. 24 to 30 too, I could have done much different. I could have been much more than I am now. I could be 10 times the net worth that I have now if I did things differently. The way in which I partnered with people would have changed in a lot of ways. But I don't have a lot of regrets. Like I've had a good run, There's a lot of scenarios where I wouldn't have been near as successful as I was in January as I am now. I say I was in January because January was my peak. Like I was like 25% richer than I am now. I've lost a lot in this recession, right? I've rode the stocks down with everyone else, the crypto down, real estate is technically down too. You should read, if you had your property's value in January, just take 25% off of all of them and see where your net worth lies. I've done all that and adjusted my net worth, and I'm still very happy and comfortable where I am, so I don't have any regrets, but sure, could I have done things better? For sure, no doubt. Yeah, I made a lot of mistakes along the way. A lot of mistakes. Hi, Mike. Any update on potential mentorship program? Willing to do whatever it takes to provide enough value so it's a win-win and worth your while. Aiden, thank you for reaching out and reminding me on that. Yes. And maybe it's something we build together. Maybe it's less of a program and more of like us having weekly calls and me connecting you to have a couple of sessions with some of my best lenders and me setting up those connections so we have lenders and us partnering together in projects. I don't know what that looks like yet. It is something I want to do. It's on my hit list for 2023. So stay in my email at rosehartcoaching@gmail.com. It's definitely something that I want to do. I have a bunch of students who could do it. We could all put like $10,000 together and have 100 grand. 10 people, 10,000 each, 100 grand. There's a pool of capital that now we can do something with, right? That makes sense and get everyone serious with it. And we start doing a bunch of deals. And if each student could do 100 grand in profit and say they split the profit with me 50-50, if I made them, one option is a mentorship program where, the students do deals with me. And so then we make a whole bunch of money together. Because imagine if each student can make 100 grand, let's say, and I split that with them, we each made 100 grand. That's $1 million. So I got 10 students making $1 million, and I'm making $1 million too. So it can be very profitable, very scalable. It's a great business. It allows me to scale with my systems, and some of those people will join my team, right, and be part of growing this $1 billion empire at some point, right? So it definitely is synergetic, makes sense, lines up with all the things that I'm doing, is of interest, and I should do it. It's coming, I think. I have to commit the time to it. And part of it is just like, I haven't had mentees in a little while now. It's been a couple years. I'm rusty. I took 4 students in. I took another 3 students in, and I had them live with me. And we did deals together, and I ran a mentorship program. And 2 of them didn't work out for their own reasons. Like they just didn't have the hustle in them. But if you have the hustle in you, then you can make money, 100%. If you sit around on the couch and you expect the property's gonna get renovated without you being there, and you're gonna get deals without doing any work, then like, it's not realistic, right? You gotta put the hours in. But you put the hours in, then you do the reps, you get the skill set, you make the money. That's how it works. It's not easy. Running any business is not easy. I think something like 10% of people are cut out to be entrepreneurs. The other 90% don't have what it takes. They won't get up in the morning. They'll snooze their alarm. They won't stay late. They won't push themselves, right? So you can bring the horses to water. You can put a fishing rod in someone's hand. You can't make them fish. You can't make them drink. But I do believe that, and again, that's why I preach on this channel frugality, because I know that 99% of people can adjust their budgets. They can go work a full-time job somewhere, just not giving a shit, what is it called? Quiet quitting, going there and just doing the bare fucking minimum, 9 to 5. I know everyone can do that. And I know you can work a full-time job, and I know you can live on half of your income. A full-time job at minimum wage, you can live on half of that. Anyone can do it. And I've proved that it's possible. So that's why I stick to frugality initially on the channel. It's because it was a wider fishing net. I was like, everyone can understand this. Everyone can make a change and start saving. There's no reason anyone has to work past 40. If you start at 20 years old, by 40, everyone should have enough. Everyone should have $1 million. You work at McDonald's for 20 years full time, you have $1 million. Like, the only way you fuck up is if you spend too much. That's it. Which, like, okay, if you choose to do that too, I respect that. I got people reach out and be like, man, I just want to have a good life, want to party, want to drink, want to go on vacation, want to live a good life. I just want to make more money. I'm like, well, you can't do both those things at the same time. They're conflicting goals. You want to be a millionaire? You got to work really hard, and you can't enjoy time for a little while. Sacrifice means going without something. That's literally the definition of what it takes to get there. Anyway, I had to wrap this stream up. It's been over an hour. I think I got all these questions figured out here. Thanks for the great info, blah, 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 blah. Any rules about leverage? Leverage is good if it's cheap debt. So be careful about the cost of debt. If the asset return is higher than the debt, you're going to be okay. That's the important thing. Where it's dangerous is if you put leverage against assets that are going down in value that don't service the debt for you. So a car, as an example, terrible use of capital. You put it against an asset that isn't going to be appreciating and cash flowing, you're going to have problems. So leverage is good against good assets if you're careful with it. Make sure you have reserves. Make sure you have money set aside to pay the payments for an extra year if you have to. If the property goes vacant, do you have 6 months of rent set aside? All of that needs to be there. I recommend strategies like getting lines of credits, unsecured lines of credits that you don't even need to use. That are there as an emergency fund to manage your portfolio of properties through rough patches that do come up. Michael says, thanks for the reply. No problem. Happy to help. Ghost Recon, good to see you on. All right, everyone. Remember, the secret to unlocking a wealthier you is 3 levers. Control your financial future. Spend less, earn more, and maximize returns and the difference. All right, everyone. Have a good night. See you next week.